¿Cierto?
¿Cómo se llamaba? Chupe de locos, ¿no?
Chupe de locos. Muy, muy buena.
Ya hace
Um,
algún tiempo.
a ver. Um, okay, so we have... Excelente. Okay, let's get started. So welcome everyone to another episode of Data Futurology, where we speak with leaders and executives in the machine learning, AI, and data science space to discuss the issues and the challenges that everyone who is leading these areas is facing, and we seek to bring you points of views, experience, and insights from these people from all over the world. My name is Felipe Flores. I am your host. And today we have a very special guest all the way from Mexico. He's José Murillo. He's the Chief Analytics Officer at Grupo Financiero Banorte, which is, I believe, Mexico's biggest bank. Is that right?
Hello, Felipe. I'm delighted to be here with you today and with your audience. And Banorte is actually the second largest financial group in Mexico. And pre-pandemia, we were the most profitable one.
Wow. And it's an organization that's over 100 years old, 100% Mexican owned. And you've been there for, I think, about 7 or 8 years. Is that right?
Yeah, that's right. I've been there for a little bit more than 7 years.
Amazing. And could you tell us a little bit about your role in the organization and how your tenure has been so far?
Yeah, sure. I've joined Banorte after a long tenure at the central bank, where I worked at the research department, and I joined with the idea of creating this analytics data science business unit, and took a little bit of time to get it organized, but it was something that was quite unique at the time, in the sense that it was created as a business unit with specific targets that we needed to meet, and that's in sharp contrast what I think it prevails in most of the industries that are analytics and data science teams are basically cost centers. So yes. That was something that was quite different, and so far so good. We've the model has proven to be successful, and as I said, when I joined, Banorte was the fourth largest financial group, and through a lot of the transformational efforts that we have gone through, we were able to leapfrog international competitors such as Santander and CitiBank.
Wow.
To become the second largest, and we have been pre-pandemia, as I said, the most profitable, and I think after we're getting back there, and I think we're still the most profitable. I'm not really sure, but I'm sure that we're getting back on track.
That's incredible. That is incredible. And tell me about the early setup of the capability in the organization. I love the decision to make it a business unit with its own metrics and goals to achieve. What were some of those goals, and how did you get there?
Yeah, that's a very good question, and which actually it's quite deep on how do you establish the success metrics. And the way that it worked is that, and probably a lot of firms that are going through this with the intention of transforming into a data enhanced organization, there's not a single view within a company. And I think at the time there was a forward thinking camp that thought that it was the way to go. But after all, Banorte, as you said, it's a 130 plus years institution that survived and growth and had grown through muscle and acquisitions, mergers, and but somehow the model was in decline. The profitability was going downwards, and you know, I as I said, I was coming from the central bank, so I was tenure as all the other central bankers there, and I suddenly moved to the private sector with different rules of engagement, and suddenly the idea was to build these data science, and I think it was a blessing in disguise at the time, in the sense that they asked they funded the group, and I think there was still some doubts of what would be the yield of, you're going to bring people that are quite different from what the group used to have, and they asked me, well, yeah, we're going to fund it, but in a year time, you need to deliver 10 times your cost. And it seemed quite steep.
Yeah, 10 times.
because for a traditional business, they are asking 3 times their cost. But they were asking at the time 3 times. To make a long story short, on the first year, I made 46 times the cost.
What?
And last year we were close to 250 times our cost with an increasing base.
What?
So it kind of like the fact of being a business center forces you to focus on projects that have a high yield return on investment, forces you to measure what you're doing. And by measuring, you are understanding where do you need to focus and what you have done right, and to be accountable on how you're employing the resources. So that's the way that we started, and I was very and it's, with these things there's a lot of luck in it. There's you tend to kind of attribute or to assign the thing to your own talents, but there's I think a lot of luck, and I think at least of 3 things. The first one was that the group was really willing to transform. There was this willingness, although there was not a single view at the time. The second is that I was where the group was reporting to a person that had a lot of business knowledge and kind of like direct us to where there were money pockets where we could really use analytics, and at the beginning you don't have all the the data and the technology that you're using. They're still on their way of being implemented and being so. And I think the third one was that, as I said, that we were built to deliver profits, and I think that helped us to focus on things that were valuable to the organization, and to be accepted because you were bringing value.
Yes, yeah, definitely. That is a fantastic focus, and to have it from right from the start. I think it's amazing. And tell me, how was that first year between sort of starting and getting to the 46 times the return for the cost of the team? How was that in terms of building the team, deciding which areas to focus on in the business? How was the journey of that first year?
I think my views have evolved through time on what's the right team to have. And initially I think that and that's again, there was a lot of effort and a lot of decision to make things happen, but we had a lot of luck. We had a good partner we were directed to businesses that we could really transform, and they were willing to be to undertake the journey with us, and so we focused initially on the credit card business. And the initial group that were 10 highly qualified quantitative people, a couple of them with deep business knowledge also on banking. And the first project that we undertook was to optimize reserve requirements on credit cards. And that was it was a beautiful project in the sense that when you do, optimizing costs has a limit, but there's a zero bound. But at the end of the day, it's something that when you do it, you can prove it to everyone. You reduce the costs, so the accountants from the company can go and really say that what you're saying is true. And it's something that when you execute it, it's immediate. It's different from revenue generating projects that have that probably the yields are going to be seen in about 10 years. And that gets me back to the question on what's the metric that you said, that you asked me, what's the key metrics that you use for, and the way that we are measuring, there are three types of projects. Those that are cutting the costs, reducing costs, and those are measured by the contemporaneous effect on the cost structure. When you talk about risks and when you talk about financials, that's something that you estimate the value of the net present value of whatever you have done, and operationally is contemporaneous effect. More interesting is how we're measuring revenue generating projects, and those are measured through the impact that you're having on the metric that we agreed on is the impact on the lifetime value of your customers, and so that requires a big leap of faith in the sense that you didn't have estimations of the lifetime value of the customers, and some of those estimates were based on coefficients that were pre-interventions that you were conducting, and a lot of those benefits are going to come through time. So it's a little bit more complicated there. And then when you have one of these teams within a company, there are different requirements for kind of like internal consulting. And the way that we use, since we're a profit center, we need to assign a cost for the time that we're devoting to projects that are not reducing costs or generating revenue. So we price the time that we are devoting to relevant and important studies or projects that need to be taken care of, but not necessarily have an immediate impact or clear impact on the company.
That is incredible. Yeah, I'm so impressed with the how you're able to explain the subtleties so well, and really bring to life and make it so clear for things that people don't usually think about when setting up these teams and making them a profit center and having such a huge business impact. It's it is very, very impressive. And tell me, why did you choose to start on the credit card side out of so many areas to focus on? How was it that you ended up starting there?
That's quite a good question, but and let me be very, very honest. I was a bit overwhelmed when they told me that I needed to make 10 times my cost in a year, and I was a bit reluctant to really kind of like accept the challenge. To be very honest.
Yeah.
And my boss told me, you're not going to have a problem. You should just go and look at the amount of reserves that we have on the credit card business, and you'll be fine. And so that was kind of like he knew where were the money pockets within the company. And the second thing is that it seems that, let's not be kind of like naive when everybody might think, well, you have a bunch of new data scientists and everybody's going to be delighted and be very, very much willing to work with them. And that's not necessarily true. Everybody has, they already have their own external consultants. They have their list of priorities that they want to work on. And when I picked credit cards, it was kind of like a group that was willing to work with us. And that year that they worked with us, that very first project increased their profitability on that year 25%, and it had recurring benefits on the following years, and so that kind of like we had a champion that was very happy with immediate results, and then was willing to invest in more medium-term projects that would take a little bit more time to mature. And that was like the second big project that we had, and in the sense that we made an analytic redesign of the cross-sell process for credit cards. Now my team is kind of like through the analytics efforts, we are selling about half of the credit cards the company is selling, when some years ago it was zero. So it's and from there it was kind of easier to get new people interested on other business leaders to get interested in analytics and try their hand in how they could improve their own businesses.
That's great. That is fantastic. And how important do you think was that? How important was it to choose a process that drives revenue as a first project, instead of going for something that lowers risk or lowers cost? How important do you think it was the revenue, or the project that adds revenue by redesigning the cross-sell workflow?
I think it's crucial to because, as I said, you kind of like gain credibility by showing the results, and in that sense, I think it's very important, and the fact that they were huge and big results, that kind of like gives patience for other things that have higher yields, but they are require much more work, and it will come through time, and that you need to invest, and that people are willing to invest their time in your ideas. I guess that's the basis of capitalism, having other people willing to work on your ideas.
That is incredible. I'm so impressed. And so where did the team and the capability, where did you guys go from there?
We have really evolved to a much more diverse team that has a more kind of like a wider arc of knowledge in some sense. And initially you think that a lot of the people that are like you are great hires, and yeah, it could be, but also what I found is that you can really have a big impact with a diverse group of people that have different backgrounds, knowledges, genders, and I will tell you one of the things I'm really happy with is that we were able, by now we have a factory of ideas that it's very efficient. We are the first, for example, the first RCT, randomized control trial that we wanted to run. It took about 6 months to get it authorized and get it done, and it was shaved during that period because everybody was kind of like afraid of what we were trying to do, and we didn't had surprising results. By now, it takes us about 48 hours from the time that we think of the thing and we deploy, and then we have all the right algorithms to measure. And then from the things that are successful, we scale them up using causal machine learning algos, and it's really a thinking machine that has been built. And for that, you need people that are from people with backgrounds more closer to social psychology,
Mhm.
behavioral economics. And then you also need the people that know about computer science, artificial intelligence, and that also know about experimental techniques to understand what is the true causality of interventions that you're running. So it's in that sense, the team has kind of evolved to be to have a kind of like a broader thinking on to approach problems.
Yeah, that is amazing. And yeah, my guess was that you had been able to create very efficient operational processes to deliver the projects, and that you had been building a technological capability that allowed for an increase of speed, a measurement of results. Yeah, I definitely, I sort of was getting the hint that that would be a really important backbone to be able to not only scale the efforts, but to scale the results even faster. Because as your costs and your team has been increasing, your revenue impact and the savings for the organization is increasing even faster. So, yeah, what is your if you could tell us a bit more about either, let's go for the operational processes first around the project deliverables. How is that structured for you guys?
So the way that we are structured, there's working very close with us, but it's something that we don't. We're able to kind of like not worry too much about it. It's for this thing to work, you need data, technology, and brains. So you have a chief data officer that is really good at what he does. He's completely independent, autonomous, and we coordinate very well on what we need. But he kind of like he's worried about the data. We are also worried about getting new sources of data, and that's where we need that communication with him. On the technology front, we are. It's something that, again, the success gives you a louder voice in which investments you need, and allows you to have much better technology, and that's, we've been fortunate enough that that we have a lot of the nice tools to be able to exploit the data. And regarding the brains, we are again, it's when you're starting, it's hard to attract. You're attracting some of the people you knew from different paths of life, and some of them believe in you in the project, but it's still a big gamble when you're starting off. But when it's already something that it's established, a proven track record, then you are able to attract top talent, and you can go at a faster pace with the smarter the people are, and now we are able here in Mexico to recruit the best students from the best universities in their disciplines, and we're very happy for that. And so you have we're completely separate: data, technology, and analytics. The three groups are reporting to the chief operating, financial officer for the corporation. So that helps align a lot of the staff groups to really deliver value. And so that's something I think that's also a big question that has not been yet solved on where should I allocate these type of groups, and should data science, analytics report to technology, to marketing, to product. And for us, it has worked very well, the fact that it's allocated with the chief operating and financial officer. And it has given us a lot of empowerment to do the things, the transformational kind of business that data science is. And we are a group. Also, something that has helped us, and I have to acknowledge that, is that the CRM, it's part of the analytics team. So a lot of the ideas that we are part of the speed on which we're able to deliver a lot of the interventions and tests that we're running is because we have a control of the CRM and all the alternate and digital channels for the company. And so that's, even though you have a lot of checks and balances on what you're saying, but you have the muscle to deploy the interventions. And so I think it's a close coordination between these data technology / innovation and analytics, data science, and the fact that you are placed, you're at the right place within the organization.
I am so impressed because you are, the fact that you're running an experimentation platform inside a large bank, it's something, you know, taken out of somewhere like Facebook or Google in terms of the experimentation, starting with small cohorts, running the randomized control trials, look at the causality of the interventions, and scale accordingly to the success, and then becomes, as you said, an idea factory, and you know, it's not. It moves away, which is something amazing to see in a large institution that has been established for over 100 years. This experimentation platform that you've built moves it away from ideas coming through the political clout that people might have, and getting those ideas, you know, being prioritized and done first, and you've effectively been able to move the organization for almost anyone's ideas to be able to be tested, and then the best ideas are the ones that you know get scaled out to the public. Is that right?
You're making an excellent point. At the end of the day, the whole point is that if you have an organization of 27,000 people, you don't want only one brain to be thinking. You want to really profit from all the brain power that the organization has. And for that, you need to really tame the hypo, the highest paid person opinion, that it's so prevalent in lots of organizations in around the world. That and it's really you are able to really establish and move forward with the best ideas.
That is great. That is fantastic. And how was the process of building that experimentation platform for you guys?
Well, as I said, initially it was a bit painful because there was a lot of reluctance, and when you've never experimented in a company, it seems that the short-term objectives are you know,
almost in contrast to
are at odds with the process of learning and perfecting what you already know, and that's the way why companies do things for 20 years, and they never knew if it's something that it works or it doesn't, or if the conditions changed. The fact that it worked, that something works. And so, but there are a couple of things that I can tell you about the experimentation process. Initially, I think part of it is to blame to us that the first experiment that we picked was so wrong. But then we had we built and probably were in the process of building our credibility. But once we had credibility, we started to run the first experiments, and it took us some time because we hadn't developed the algos to make automatic selections of the populations that were going to be treated or they were going to be used as controls. And we didn't, and it took time to measure the things because we hadn't built that infrastructure to make it quick. But but we got some very interesting results that got the attention of everybody. And then we also needed to build the causal machine learning algo. So we didn't have all that infrastructure, but we had some really interesting interventions that caught the attention of the company and thought, and the company thought that it was something that it was had the power of changing the dynamics of how we were doing things, and being on a continuous cycle of being perfecting what we were doing. And the final thing that I can tell you about it, so it's well, there are two things that I can tell you. A lot of the initial exercises that we ran were kind of like very much taking out of an academic book from behavioral science, and we were running at scale experiments that were run in universities, and some of them were quite successful, others not. But something that there are two things that are that after that. So we relied a lot in built knowledge in academia. The second thing is that once we applied it, you have limited resources. So we did a meta-analysis on prior interventions that we ran to understand what worked, and if we had few bullets, where we needed to use them. And so that also helped us to focus on what was more important. And the final piece is that from a position of probably of disbelief across the company, if this thing was going to help, and why you needed a control group and not run to all the population, the intervention, but that's kind of a lot of pushback. Then it was kind of a neutral stance. But the most important thing that I think that we did is that when the pandemic started, we set up a workshop to help our business colleagues to have to further their understanding of what was data science about, and I think that really transformed people from their neutral stance to become promoters and get excited with data science projects. Now we are running that second workshop, and we partner with one of my academic partners, Duke University, the Center for Advanced Hindsight, who they're teaching they're delivering the workshop, and you won't believe it, but there are 240 people that are connected to that workshop. Wow. Actually, we're running that workshop in 2 hours. We're in about 2 hours. We're going to have the fourth session from that workshop on a week that we run on a weekly basis.
Nice.
And it has people from across all the company, from the business lines, from human resources, from you name it. But 240 top leaders within the organization, and they made 24 teams to build their own behavioral data science project, and so the fact that people it's something that it's more familiar to them, the fact that, and it's not something that seems far away from what they're doing, and you further the understanding, and I think that has been the game changer for us.
That is incredible. That is such an excellent initiative to create more buy-in and more awareness and more ideas to come in from all parts of the organization. Getting people to understand more about what data science can do. It's a big hurdle, but but this sounds like an excellent way to democratize that knowledge. So impressed. We have a few. Sorry.
And I was going to tell you, and something that I think it's, and probably that's for the benefit of the audience.
Yeah.
Something that has been very also useful for us is establishing academic partnerships with professors in different fields that have helped us also to further our own understanding of the data science, because this is something that it's evolving so fast that you need to be constantly learning and adapting yourself. So in that sense, as I said, we have partnerships with Duke University, Harvard, Carnegie Mellon, MIT, and UCSD, University of California, San Diego.
Mm-hmm.
There's something we are with the University of Chicago, and so that's something that you have your own talent within the company, but it's something that can be you can grow on that partnering with the right people.
Amazing. And those partnerships, they're obviously world class. So that really is a huge testament to the work that you're doing, and I can see how you're bringing in the as you said, the best brains that are available. That is excellent. We have some questions from the audience. So thanks everyone for putting your questions in through the Q&A section. We'll start going through some of them. The first one is from Lucas, who says, I love the split between the types of projects. What is the current split between the three types of projects, between cost saving, revenue generating? I thought the other type of project was reducing risk, but he thought that it was maintenance. And so, could you let us know what is the third type of project, and what are some examples of each?
Sure. You have basically you have cost-cutting projects, and that accounts for about 10% of the profits I generated last year. Mm-hmm. Then you have revenue-generating projects, and I will explain what it's some examples of each. And then you have like internal consultancy projects. Mm-hmm. For example, you might the first and that's the remaining 5%. Mm-hmm. So 10, 85, 5, mm-hmm. And the consultancy projects are good because they help to improve you're a good corporate citizen, and it helps the company to improve their decision-making processes, and they can be a lead that for eventually for revenue generating or cost-cutting projects. So the for example, internal consultancy project might be something like, well, we a couple of years ago we bought a bank. And there were some questions if there was a risk to be dominant in some markets with that purchase. So we were the best fitted to make that analysis and understand if that would be a problem with the competition agency. And or another type of that type of projects might be it might be quite varied on different issues that probably the company needs to go deeper on the data, and it's not that clear what's the bottom line on that. For example, you needed we have a large portfolio of loans to governments. So you need to understand if there's in an election process, if there are going to be risks, and some of the things that you might be doing is to have in a contested election, if what's the opinion on who's going to win, and that's something kind of like in the extreme of what the data science team might be doing. But it's something that it will help the organization to understand what might look like the future. A very cool project like consultancy. We're going through the pandemic, and you need to understand how faster the economy is going to recover. And suddenly the macro indicators are lagging by a couple of months. So you want to have a real-time reading on how you're tracking the economy. So we developed indicators on the spend of the families, on jobs, on how much time people are spending out of their homes, and we built also a very precise. indicator on the monthly GDP estimate that the NIS publishes, and it turns out that since we're using AI techniques and transactional data sets from the bank, it turns out that we have beaten all the professional forecasters in the market since we've been doing it for about 8 months. So that's type of consultancy. And how do you put a price on having a very good estimate of GDP? Well, it really helps the organization having this window of a couple of months to understand where the economy is going and how it should undertake risks. But it's very difficult to put a price, but the hours that we put into the project. Then you have a lot of projects that have to do with, for example, cutting costs, and I said those are like reducing risks, and I gave an example, reducing operational costs and optimizing financial costs, and those are quite evident, the things that you can doing there. And on the revenue generation, we're working right now with almost all the verticals within the financial groups, and that entails retail, wholesale, international, the insurance company, the pension company, the asset management company. We're also working with some stuff areas like fraud, human resources, and the way that we do that is that if we as I said, we are estimating the effect on the lifetime value, and that can be, for example, enhancing your moving one customer from a low lifetime bucket to a higher lifetime bucket segment. And how do you do that? And that might be because you can develop the business relationship with the customer by either 3 types of strategies: either extending the time that the survival rate of the customer, how much time he spends with you, doing business with you, how much business he's doing with the product that he has. So if he has a credit card and he's using your card and another card, you want to the customer to favor your card with respect to that of the competitor. So they're using much more your product. And the third way is by the customer to having more products with you. So if he has a credit card, now he has also an insurance policy or something like that. So that's the way that we are the 3 type of projects.
Phenomenal. That is a really great framework to focus the analytics capability, the team, but also to interact with the business. That is awesome. I think related to your answer, we have a question from Jose Carlos, and he says, regarding data science applications in the banking industry, what do you think will be a game changer in the industry? So in applying data science in banking. So he says, obviously there's a lot of applications that include fraud detection, credit scoring, things like that. But what do you think would be a game changer in the industry?
I think it might be a bit trite, but the game changer, I think, is the digitization of the customer. And with the digitization of the customer, that he's able to do to bank 24 hours, 7 days, and the expectations of the customer are suddenly shorter. In the time that they expect a response, and the knowledge that they expect the company has on them. So I think that's the true big changer, and so a lot of things that you can do to engage more actively the customer in the usage of your mobile app. It's something that it's very relevant. There are a lot of things that have been that have, there are a lot of things that, suddenly the industry thinks that something it works and suddenly not, because what you want to do is, if you really believe in increasing the lifetime value of your customers. And what that means is that the value of the way that I think is that the value of the company is nothing else but the sum of those lifetime values. That's what the company is worth. So that's, and the way that it makes sense is that it makes sense for everyone, especially for the customer, in the sense that he becomes financially stronger through time by being your customer. So you really want to be to advise that customer on how he can become financially stronger, and through the digitization, you are much more able to do it, and to make that customer understand how to save more for tomorrow, how to not end up not paying their bills and being on the credit bureau with the negative marks. And so I think that's to really the big challenge for banks is really to serve much better their customers, and to help them become financially stronger. And I think that every time we have the technology and the brain power to do that.
That's great, and that's a really fantastic aim of helping the customer be financially stronger and more successful, and that they get there by being a customer of your organization. That is awesome. And we have a related question from Anne. She says this sounds incredible, and she wanted to ask about applications of analytics in customer experience. So very, very related. And yeah, either how are they, what type of initiatives do you have in that space, and what do they look like?
That's a great question from Anne. And when we started this journey, we didn't have metrics of customer satisfaction. And it's been some time through the success that we had allowed us to start making those. Again, it's having the data, and to build that data set on customer satisfaction. Specifically, we are measuring the net promoter score. And the cool thing that we're doing is that we are using those metrics to understand what is, I guess, it's not only to measure if the customers are happy or not, but the change is when you start to measure and say, well, the cost of of an angry customer is such, and so you understand much better what is the cost for not being able to satisfy your customers, and through analytics we've measured those what's the cost of those of that insatisfaction. We've also measured how you can improve the customer satisfaction, and we made different interventions to try that. One of the coolest ones that I like very much is, for example, the usage of and something that has changed the view of the way that I think that we need to interact with the customers, is that how transactional you should be with the customer. Would the bank only give you a certain gift if you do something that I want, or is it much better if I give you a gift and then expect you to do what I want? And for example, I've done some very cool experiments that I found that reciprocity has a tremendous power in changing the nature of the business relationship with the customer. You can also try, for example, regarding customer experience, once you have someone that is not satisfied with your service, how you should ask for forgiveness. That's that's an empirical question.
Yeah.
That's something that you can test, and there are different ways on how you should ask, and there are different ways that you should approach people by age, gender, wealth, on how you should be asking asking to be forgiven, and should you ask to be forgiven if you're going to mess up again. There are a lot of interesting questions that you can have there, and once you have set up a data science team and these experimental machine, then you can, there are a bunch of questions that arises on customer experience that are very relevant.
That's impressive. Yeah, and I love the empirical approach across the board. So to every customer interaction, to every intervention, every offer, everything can be measured. That is great. And so related to the customer experience question, we have a question from Hugo, who says, have you done analytics with millennial spending models? And it says that, it seems like it's an area that is getting a lot of attention and maybe a lot of competition in the market. And the question is the analytics area focused on millennials to help capture and grow this market?
No, we don't have a specific focus on millennials. The focus so far is that we have used the customer lifetime value to segment our customer base. And from there, we have different segments. Then we have different clusters depending, and different archetypes that and we end up kind of like designing specific triggers for different kind of like mini clusters. And at the end of the day, it's, there are relevant problems with millennials, and there are also each group has its own challenges, and there are things that people respond much more to different age cohorts, to respond to different interventions differently, and we kind of like what we have tried to do is to have built a behavioral map of all our customers, and that but that's not focused especially on millennials. Millennials are included, but there's not a specific thing that we're doing for them and not for everybody else.
Yeah, that's great, because through the person's behaviors, then essentially the interventions are presented to them with different offers, and they could be a millennial that may have the same behavior as a 40-year-old, or a millennial that has the same behavior as a 60-year-old, and if their behaviors are the same, then their paths will be the same. Is that right?
Yeah, there tends to be like similarities within age cohorts, but then you can be much more granular in some sense, and that's what we try to do, to ideally to have a much more personalized relationship with the customers.
That is fantastic. And we'll squeeze in one more question, which is from Tim, that says, if you could wave a magic wand and significantly improve the data science technology available, what would be the technological improvement you would make?
I think it's data preparation.
Yeah,
that's a lot of the difficulties are there, and it's a hard and probably not that recognized job. Everybody wants to look at the sexy stuff, but that's where a lot of the pain is.
Right. So much pain, so much time spent there, so much education that we could do. I completely agree. So I know that we have a couple of questions that have gone unanswered. One of them is asking about manufacturing, and there's definitely a lot of analytics that can be done in manufacturing. And we have other episodes that are focused on manufacturing. The approaches are more around optimization, so digitizing the manufacturing plants and then running AI to optimize it. And then the problem is getting people to take on the advice from the AI, but our guests have discussed really great approaches for that. We had a question from Raj about gaining experience in the financial industry, and definitely time will help get experience across different projects, but there are certain roles that will expose you to more things quicker. And some of the roles, like Jose was saying, with an internal consultancy type model, definitely gets you more visibility across areas quickly. And then the last one was about education, transferring data studies from finance to education. Any common threads? I think, as Jose was saying, being able to digitize your customer journey allows you a lot more flexibility to apply these techniques. And I know that's something that is happening in education, but it definitely is an area that needs a lot more human touch. And we do have other episodes with people from the education sector. So please look those up, and we have some other ones coming up. Jose, I am so impressed. Thank you so much for sharing your time, your experience, your insights, your perspectives. Like the work that you've done is literally what I would expect from a top tier global technology company. And it's what you've done at Banorte is something that I thought had been done in like 2 companies in the world, maybe like Amazon or like Google and Facebook was my guess. So what you've done is amazing, and the success that you've had and the impact that you and your team have been able to create in the organization is recognizable. Like it was a path that was very well charted, and I'm so impressed by everything that you've done. So thank you so much for taking the time to enlighten us and to share all that with us.
Thank you for having me, Felipe. It was great talking to you. Muchas gracias. I really love to be with a fellow Chilean. Although I'm Mexican, I told you I feel that I have a part in my heart from Chile.
I love it. Thank you so much. Thanks everyone everyone in the audience who joined the webinar. Let us know your feedback. The episode is going to be posted on YouTube and on the podcast. So get it anywhere you get your podcasts, any app that you use. Data Futurology is there. Jose, thank you again. Thanks everyone who joined live. Muchas gracias, Jose. Que esté muy bien. Everybody take care. Talk to you soon.